morning, good afternoon, and good evening, folks. This is Naeem Azam, Chief Market Analyst at AvaTrade, and welcome to our series of masterclasses. And today's segment, we'll be talking about how to trade stocks. But first of all, if you guys can hear me loud, and also if you can see my screen, please do give me check by saying yes or no so that I know that you guys can hear me and there is no tech issues, because remember, the technology issues, they do exist. Great, Amutha, good to see you. Andreas, good to see you. Cormac, you can't see my screen. You should be able to see my screen. I don't know. You should be able to see my screen as far as I can. The settings are okay. Can everyone see my screen? Just wanted to make sure. Frank, great to see you. And Leonard, good to see you over here as well. Okay, so everyone can see my screen. Thank you. Thank you. Hello, Anne-Marie. How are you? Hope all is well with you as well. Okay, so a lot of as well over there. So before we begin, as always, what we're gonna go through this brief disclaimer, which is, anything which will be discussed in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. This is purely for education purposes. Again, the recording of this particular webinar will be available at the end of this video. It will be uploaded on our YouTube channel. The link for that is, or the channel name is AvaTrade, and please do follow us on our Twitter handle as well, where we do tweet quite regularly. Now, the agenda for today is, of course, measuring indices, measuring sectors, special stocks, and unfortunately we are still under COVID-19 situation given the recent rise in Delta cases. So that particular play is still very much back in the market, or under the traders' radar, where they're very much paying attention to very similar sort of stocks where we are looking at. And in terms of stocks, we'll be really looking at some of the following names. Perhaps we may not be able to go through all of them, but we will try our best to go through all of them. So in streaming, we will look at Netflix and Disney Plus. In airlines, we will look at Boeing. Pharmacy or pharmaceutical, we will look at Johnson & Johnson, and of course Pfizer. A lot is happening with Pfizer's with the Pfizer stock, especially with respect to their vaccine, the COVID vaccine that they're really working on. And then we'll be moving on to Amazon, which is, in my opinion, selling at a huge discount currently, and so is Alibaba as well. We will discuss why these two stocks are selling at a discount, and if there is an opportunity with respect to these online retailers. And in the energy sector, of course, we all know that oil prices have gone through the roof more recently, but for the last few weeks, or shall we say just more days, we have seen some retracement in oil prices, and that is influencing these energy stocks. But we will have a look a bit more on a wider aspect as well, like such as, what is the future for these particular stocks, such as Chevron, ExxonMobil, Shell, and Total, especially when we are really referring to a renewable energy and how they are really diversifying their portfolios. And if there is an opportunity with respect to that, banks, really interesting stuff going on over here, because the Federal Reserve is about to announce that the loose monetary policy, the party for QE, is about to end, and the Federal Reserve is highly likely to begin the tapering process, and that means higher interest rate in the future as well. So, banks like Bank of America, Citibank, and Barclays would be quite intriguing for us to look at, because obviously interest rates, if they increase, then that is going to influence these banks, their profits, more favorably. So of course, at the same time, we would expect higher volatility in the market as well. So what does that really entail in investment banks like Morgan Stanley and Goldman Sachs as well? So that would be quite a nice one to look at. Now, for those of you, because I do see a lot of familiar names over here, especially Amutha and a few other people. So, Grammy, you're saying that you can't see anything. Robert says he can't see anything. Really? Can everyone please confirm once again if they can see my screen? Because few people are saying that they cannot see the picture. So Amutha, you can see my screen, is it? Can you see the presentation, the agenda presentation? Ah, okay. So some people are saying that they can see it perfectly. Others are saying that they can't. So let me reshare that once again. Okay, so how about, okay, so now everyone can see it, all right? So yeah, so that's the pretty much the agenda for today right in front of you. So again, I'm going to go back to some of our regulars over here, and then I'm going to ask them to help us to answer some of that study questions, really, because these people are attending religiously and they are increasing their wealth of knowledge every time they attend our webinars. So really now I think it's time for these guys really to give us some of the answers. So measuring indices. Do you guys know that why it is important for us to measure the strength of the index or sector? So anyone can really hop in. It's an open question for the entire class. So anyone can really jump in that why it is important for us to measure sectors or the strength of an index before we do that. So any answers would be great over here. Yes, exactly. Amrita has answered that because it tells us that where the economy is really trading or the general sentiment. By that, it is really telling us. Cormac is saying that, yeah, rising and falling as well. So basically what Cormac mean by rising and falling is that it tells us that, okay, if the overall index is moving to the upside or overall index is moving to the downside, and if an index is moving to the downside, then we probably wanted to look for a stock within that sector that because that is going to be influenced by that particular index and is likely to trade in the direction of that index. So that's potentially what it really means. So let's really look at it and then let me explain to you and then break it down to you guys. Can you guys see my MT4 platform in front of you guys now? I mean, you should be able to see my MT4 platform. Yes, okay. So what we have in front of us is our S&P 500 index. So sorry, the Dow Jones Industrial Average, the US 30, which is known as US 30 on our platform. So what we see is that the US 30 represents the top 30 industrial stocks in the United States. What it is telling us that the trend is really, really strong and the market is moving to the upside when it comes to the industrial stocks. So that is certainly very, very positive. In addition to that, we can also see that for the last number of days, we are also seeing something quite intriguing, and that aspect is that the market is trading at an all-time high, as you can see right over here. So the markets are trading at an all-time high. By that, I mean the Dow Jones Industrial Average. It has found a new all-time high. Now, as of today, what we see over here is that the market is sort of retracing from its levels, and today we are seeing a slight bit of a weakness in terms of a price action, as you can see right over here. So after forming these all-time highs, now the market is sort of saying that, okay, maybe it's time to take a little bit breather, and then markets are moving to the downside. So this could be a great opportunity to bag some bargains, which we will discuss in a bit. Now, I'm gonna do the same thing with respect to an index, which is going to give us the overall performance of the market, because Dow Jones Industrial Average is mainly representation of the industrial stocks in the United States, right? But why don't we, before we look at the overall representation, why don't we look at the tech sector? And the tech sector is very much represented by the NASDAQ, because NASDAQ represents your overall tech, the top tech 100 tech companies. And we know that the tech companies have really smashed their earnings during the more recently when the earnings when the earnings came. Companies like Facebook, Microsoft, they all came up with a very strong numbers. And now we got to see that, okay, you know, how the overall sector is very much performing. So when we see that the overall sector, and we include that what is happening in terms of earnings, what we really see over here is that the overall sector is still sort of grinding to the upside, because we have a low, we have a higher low, we have a higher low, and then we have another higher low. So sort of grinding to the upside, but no substantial moves, not really explosive moves, apart from the exception of this particular rally. Right over here, we did have that explosive move, but after that, the momentum has been very much in a sideways price action, as you can see over here. And this is from the 6th of July. So since 6th of July, as you can see from here, you know, the market, sorry, I should be going right towards over here. So right around this particular price level, you can see, and between now, you could, I'm not really great in drawing the straight lines, am I? Let me try, give it one more go. So there we go. So in what we see from here is that, you know, the prices are sort of very much trading in a sideways direction, really. Since that has happened, so it's really sort of this, you know, the sideways movement that that is happening, and this is despite the fact that the earnings have been very much great, but the momentum for the overall index isn't really that great. So what does that tell us? What does that tell us? So that tells us that, you know what, that yes, stocks have performed quite well, but not everyone in the Nasdaq 100 index has been performing well, and because of that, the prices are moving lower. Now, what kind of stocks aren't really performing well? Well, one of them, as we've discussed earlier, is your Amazon. You know, when we will look at it very soon as well, we will see that the Amazon's stock hasn't performed that well. It is in a very much in a downward trend, and then that is very much influencing over here as well. Now, what about what are the conclusions so far? So the conclusion is that the tech sector is somewhat struggling, even though we had a good earnings, but not the overall momentum is not there, because overall momentum is telling us that we are consolidating. So with respect to tech, so there's a probability that we will see companies moving to the downside, and there could be an opportunity either to sell them or either to buy them. We will measure them on their own merit. Now, with respect to the Dow Jones Industrial Average, we've seen the chart of the Dow Jones Industrial Average. We see that the prices are still very much moving to the upside. The momentum is there. We had this big rally, and only recently we see a little bit of a consolidation over here. Very recently we see a little bit of a consolidation over here. We've seen that rally. Now, with respect to the S&P 500 index, over here, what we really see is that yes, despite the fact that we do see some weakness in the tech sector, but the overall market, the S&P 500, it represents, or the US 500 represents the full market. It's the actual representation of the US market, really. So what this is telling us, that the momentum is very strong for the market. So we are okay to look for a long-term trade in terms of that particular aspect, because the overall momentum is still strong in the market. Now, we have done all of our analysis, what we really need. Now we're going to go and then move into some particular stocks and really look from that particular perspective, that where are the opportunities. So let me bring out, first of all, Google stock over here. Now remember, we talked about that the certain companies are still very much moving to the upside, and Google is one of the company which is still very much maintaining its momentum. As you can see over here, it is still moving to the upside. Now, in terms of an opportunity with respect to Google, really is going to be coming as follows. Now, before I explain that, let me go through these three important moving averages which we have on the chart. This is your 50-day simple moving average, this is your 100-day simple moving average, and finally you have your 200-day simple moving average. Now, if you are looking to buy Google, because remember the overall market is not really moving to the upside, if we are looking to buy, then I think the better buy area could be right over here, which is, by the way, 2,559 to 2,589 sort of our buy area where it kind of makes sense. However, if the market continues to move higher, then we could possibly take that breakout trade. The high of this particular candle, the high of this candle is at 2,730. The moment the price kind of moves higher than this, then you could do that. But let me remind you one thing, that the risk to reward ratio, if you are going to take that, is not great. Why? Because you would really have to put your stop loss over the low of this yesterday's low. So you really have this quite a big amount of a stop loss, and in terms of a target, we really don't have a really great target to really go to base on. So for me, with respect to Google, what I will really do is I would just wait for the price to come right into this area. If it comes into this area, great. If it doesn't come into this area, I am not worried about. I will look at the next particular opportunity. So what is the next opportunity? Let's look at Apple. Apple is still very much like Google. It is pumping to the upside. Sorry, let me just bring that Apple chart again. Apple is still very much pumping to the upside. It has broken that its all-time high, which was right over here, and now it is gone into a new all-time high. So again, if we are going to do that, then we have the situation is very, very similar. We have to put stop losses as of yesterday's low. But I think that this is really going to see a retracement very soon. So again, when that retracement will happen, especially that the Nasdaq is not moving higher, so we kind of wanted to wait for the prices to come into 140 to 141 sort of a price level to go. Otherwise, if you wanted to take the breakout trade, you would be considering to put your stop losses as of yesterday's low, right? So that is what we're going to be very much focused on. Again, with respect to Apple, just like Google, not much really trade over here, so we're kind of gonna pass that one as well. Now, with respect to Facebook, now what we can see is that yes, we had that rally. Now the prices have moved back, prices moved lower, and look where the prices sort of moved low. This is why I love these moving averages. The price moved back towards its 50-day simple moving average. So over here, let's say if when the price wasn't even here, I would have been looking at this particular candle, given my 50-day simple moving average would have been here. So this would be my support zone. This is before all of this formed. I would have been just looking at this one and then looking over here when the price was trading here. I would have waited for the price to come into this zone. That is why patience really works. I want you guys to understand this particular concept which I'm explaining. So this part of the price action over here, consider that this one was never formed. We were trading in here right at this particular price point. And by looking at the chart, I would have picked up this area of support because this is close enough to my moving average over here. And at the same time, I will see that there is a gap which was formed over here. Gap forms when the prices move in the same direction or in the opposite direction, and there's a huge difference. So this gap would have been very much considering that. Or even I would be considering, if I wasn't, I would have considered this one, and then I would have also considered this area of support as well. So I would have one area number one and then support area number two. So I would have considered two different areas. And look, what happened afterwards was that the price actually did come into our area of support without any hesitation, because from here, what happened was that the price came right into this area, and then bang, we had this bounce, as you can see from here, and now the prices are moving back here. Now the question really is, what do we do now? Do we have an opportunity? Well, the opportunity is really, again, going to be waiting for the price to come back into this particular area, or at least wait for the price to come into this area of support. So 356 to 361, let the price kind of come into this area. That will be my support area or buy area number 1. This will be my buy area number 2. I would certainly prefer this one over this one. So this is a better area of support. Now, in terms of a target, if we take this trade, I would be targeting at least minimum as 367. So if the price even comes over here, right over here, this is my risk, and my reward is this much. And in this case, if the price comes over here, this would be my risk. My reward would be this much. Does that make sense to you guys? Henry, I will try to look at space as well, for sure, if we get the chance to do that. But I kind of wanted to go through the main sort of stocks first before we look into space. By the way, I am long on space, just to let you know. And I'm not worried about getting I'm not worried about the price action, the current retracement. I think now is the time to buy space than anything else. It's not time to sell, for sure. Okay, now let's look at some other stocks. So Alibaba was the one that I was referring to, you guys. Now look at that. This is why we are seeing massive sell-off in the Nasdaq, or at least we are not seeing the big momentum to the upside. Because look where Alibaba is trading. It is this massive downward trend. And by the way, for disclaimer purposes, in my own portfolio, I am very much long when it comes to Alibaba, because I think it's a solid company. Right now, regulations, Chinese regulation has become very much of a cumbersome issue for it, and then that's why we're seeing that the big sell-off. In terms of our support zone, I think that the current price levels where the price is trading right now, one could look at to buy it right now at this particular price level. Otherwise, and another important price level, the next support zone is going to be right below that. So we have 3 different zones. Let me just draw them on the chart for you guys to mention. Now, let me number them so you understand. So this is my support area number 1. This is my support area number 2. This is my support area number 3. So I would say that this is a really good opportunity to really back some bargain, because look at the all-time high was 318. Now the price is trading at 180. So currently, if you're risking about this much, your reward is all the way to here, because this is the target that you'll be very much looking at, or at least at the minimum, you'll be looking at 230. So again, you will have this much of a reward by risking this much. Or then we will wait for the price to come into this area, or we will wait for the price to come into this area. So Alibaba is really great buy opportunity right now, with the potential of a resistance number 1 over here. The second resistance number 2 is over here. This is resistance number 1. This is resistance number 2. And then this is your resistance number 3. So these are the sort of a price or profit-taking price levels that we'll be very much looking for. We are talking about weeks, really, with respect to Alibaba, because it's not a day sort of a thing, because prices are going to take quite a long time to reverse. Now with Amazon, exactly the very similar situation over here as well. Prices are at an attractive level right now. So the first area of buy for me is really going to be where the prices are trading right now. So just sort of over here. Or even you could say that this could be an area of a support number 1. Anywhere in between that is great. So this consolidation area could be your area support number 1. If the price drops further, then our second area of support is going to be between 2,883 to 2,957. So this area is going to be our second area of support. So let me mark that on the chart. So area number 2 as a support, area number 1 as a support. Resistance is going to be right over here, not considering anything less, or at least over here, sort of a resistance would be this. So this, if this is resistance number 1, this is resistance number 2. In terms of your risk to reward ratio, this is your risk right over here. Your reward is going to be this much, or your reward is going to be from here to all the way to here. So really, really great opportunity with respect to Amazon. Really, like, look, imagine, you know, when the price is like over here, now we are seeing that retracement. So I think Amazon is a really, really good opportunity in terms of that long-term buy in your portfolios. Now, what about next? What about Twitter? Can we look at Twitter quickly? Twitter is again retracing from its highs in terms of a buy opportunity. I'm going to mark my buy opportunity somewhere around over here where the 200-day simple moving average is trading. So just right over here, sort of for that. And then I'm going to mark my second buy zone right over here. So that 48 to 50 is my second buy zone. So here are our support zones. So support zone number 2, support zone number 1. In terms of a resistance, area number 1 at 70, and area number 2 is going to be at 80. So that's a resistance over here, buy zone over here, buy zone over here. Again, don't worry about it if you are not getting all of that. So, you know, you will have the recording of this one. You can go back and quickly take the numbers from there as well. Robert is asking, but AvaTrade trades CFDs, so we don't own the stocks. That is correct. Otherwise, you will have to have a lot of money to own that. So with CFDs, you get margin, but margin comes with the responsibility of high leverage. And that means that stop losses is must for your stocks, for your trades. You must place stop losses in them. Now, let's look at Bank of America. Remember the banking stock that we've talked about. Right now, there's a great momentum in the price. Recently, now we are seeing a bit of a retracement. And even today, the market is indicating a smaller or a lower open as well. So for me, the really great area of opportunity as a support area number 1 is going to be right around over here. This sort of a price level, 38 to 39 would be my first. And if you are an investor who could practice a little bit patience, then we are looking at this particular price level where the 200-day simple moving average is very much trading in. So we are looking at this particular 35 to 36 as a good area of support. And then this is a slightly bit aggressive area. When the price pops into this area, you could trigger that buy zone. But remember, the more likely chances are price is going to break these moving averages today, and it is going to come more into this area, or it could, what we could see is actually even this one. So anywhere 37 to 38 is also equally an important area of support, all of this consolidation. In fact, we are going to stick to that now. But this is our support area number 1. This is our support area number 2. In terms of a resistance, the first resistance that we're going to be considering at is this one. After that, it will be 45. I'm going to write that one over here. 45 would be our next area of resistance in relation to Bank of America. Now, let me bring out another one stock, because before we can call it a day, because we are running into it against the time. So ExxonMobil, shall we do ExxonMobil? The energy stock, as I said, retracement is happening with respect to oil prices. Oil prices are coming lower, so is the oil stocks are moving lower. So what we're seeing in terms of that really is that we need to have a new area of support. So that new area of support really is going to be in around this particular area between 59 to, let's say, 51 to 53 is your first area of support. And then afterwards, if that doesn't really work, then you've got to be looking at that 48 to 49 sort of a price level as your second area of support. Then if not that, then your third area of support is really going to be right over here, which is going to be 44 to 45. So let me mark them on the chart for you. Area number 1, number 2, number 3. Obviously, this is aggressive area. And this kind of tells us that if you wanted to take that trade, if the price comes over here, it would be very, very beautiful. But at the same time, I do want you guys to be mindful of something, which is the possibility of double bottom forming within this zone. So you could consider this one as an area support, area number 4 as well. So just that before 40, 54 to 55, 55.30. So this area right over here, you could consider that as well. If that doesn't work, but you could have some partial position filled in at this point. You can have a partial position filled in at this point. You can have a partial position filled in at this point, really. So you could use these two as together. If they don't work, then you could just focus on this one. Really depend on what sort of things that you really wanted to focus on. As for resistance, we're looking at this as area number 1, area number 2. So really, risk to reward ratio is really good. So again, ExxonMobil could be a great buy right now as well. And currently, this area as a double bottom first opportunity. Number 1, second opportunity, third opportunity, opportunity number 4. All right, folks. Tomorrow we have our general normal webinar again. And because last week we had a tech issue, so we weren't able to do it. So I had to do this special webinar for you guys today to cover for that. And tomorrow I will see you guys same time once again. Stay safe until then, and I'll see you guys tomorrow. Thank you.